All right, scholars, we're now going to take a look at how the various transactions have a net impact on your balance sheet and on your income statement. Let's first of all start with the lessee. And remember, there are two types of capital leases. There's the operating capital lease and there's the finance capital lease. When is it a finance capital lease? When she owns it. Ownership transfers, written bargain, net present value, economic life, or specialized asset. Any one of those met, and it's a finance capital lease. All of them missed, it's an operating capital lease. So let's take a look. When you initially set it up, obviously cash goes down, the asset that you're capitalizing goes up, the liability goes up originally, and then of course with each payment, the liability goes down, and of course you amortize the actual asset. Now, we don't call it amortization. If you recall in my lectures, I incorrectly, but for descriptive purposes, I call it depreciation. I know it's called amortization, but I'm going to call it depreciation. So we depreciate the asset, and of course, we have interest on the liability. But we combine the two of them and treat it as lease expense. Now, if it's a finance capital lease, same thing, cash goes down, you have the asset being capitalized and then depreciated. You have the liability and then you're paying it off with interest. Notice you'll have two expenses that get reported on the income statement. You have the lease expense, which is going to be the interest on the item. There's your interest expense. And then you're going to have the asset being depreciated. So you'll have the asset being depreciated. Remember, the correct term is amortized, but I'm incorrectly calling it depreciation to hopefully help it understand us. Well, what about from the lessor's point of view? Look at that man, Mr. Olinto. All right, maybe he's a mini-me. I don't know, maybe. Anyway, you'll notice they have three different types of leases. They have the sale type, that's the one in the middle. That's when you're giving away all of the risks and rewards. And remember, that criteria was simply, if the lessee owns it, then it's a sale type lease, and you recognize gain immediately. If it's not that, then maybe it's most of the risks and rewards. That's when you meet both of the criteria of the present value and collectability. If you met both, then it's a sale type. A direct financing type. You're also going to take the asset off your books, and the gain will be amortized over the lease life. If you miss both of those, so you don't have an owns for the lessee and one or both of the PC are missing, then it's a operating lease for the lessor. They carry the asset and they depreciate their asset and they report rental income. So on the balance sheet, they're still carrying the asset and they're depreciating it. Notice on the income statement, rental income, and they depreciate that asset that they're still carrying. If it's a sale type, cash goes up, lease receivable starts going up, it goes up immediately, and then it's paid down. The fixed asset, get rid of it. And you have what I call the residual asset. In our lecture, I call that the potential hunk of junk. You'll notice gain will be right away. If there's a loss, that would be reported. And then, of course, you'll show interest income. Note, if it's a direct financing, cash goes up, the receivable starts up, and then, of course, is paid down. You take the fixed asset off your books, and you'll show the hunk of junk. Notice here, the gain will be amortized over the life of the actual lease. And of course, you'll also have interest income that gets reported there. So ultimately, you combine those two, but it ultimately shows up as part of the income that you're going to earn. Net effect is both of these will have the same amount of net income, but one will have a gain and then some interest income. This one will have interest income for a larger amount over the entire period, simply because we have the gain built in there. So those are the fundamentals of how this works. Hopefully that helps you understand, and you're now ready to work a problem.